coincidence. I think you're trying to cover up for the lack of humility. That's fine.
Oh,
Look,
stop.
I understand. You're feeling very empowered and emboldened by what's happening. Let's get into it from CNBC, and then you can continue to claim your trophy. Okay.
Let's do it.
Federal Reserve Chair Jerome Powell said Monday that the central bank will not wait until inflation hits the 2% cut to cut interest rates. Speaking at the Economic Club of Washington, D.C., which I did not know was a thing, Powell referenced the idea that central bank policy works with, and I'm quoting here, long and variable lags. This to me sounds a whole lot like inflation is transitory, but he's saying it works with long and variable lags to explain why the Fed wouldn't wait for its target to be hit. Now, let's be honest here. If you're Jerome Powell and you were telling everybody just a couple of short months ago that we were going to wait till we got to 2% before we started cutting rates, why the fuck am I just now hearing about long and variable lags?
When that's something that we've routinely said on the show and that was a major risk, right?
Yeah.
Holding rates, quote, higher for longer, which is what the words that came out of his mouth. The risk associated with that is you can't hold it for too long because you mention it all the time. It's like a pendulum that swings, right? Then you hold it for too long. You can't just start cutting rates and then the economy just starts booming again. Yeah. If you hold it for too long, there's going to be long rippling effects.
And what I keep trying to tell people is you can't just cut rates and stop the economy on a dime. The pendulum is already swinging back the other way. If you cut rates, you're going to slow it down, but it's still going to keep swinging. You're not going to stop it. So that means whatever we're walking towards from a recessionary event to lower spending, we're walking towards it. And nothing they do from a rate cut perspective is going to stop the inevitable future. All they can do is slow it down at this pace and hope that it gets to 2% and then stops in and around that range and then starts to reel back up to a healthy number or stay stable. That being said, let's go to the next article here so Saied can continue to claim his honor here. I didn't want to go too far into this particular article. This is one from Bloomberg. Powell says the U.S. data offer confidence that inflation is on a path to 2%, says risks to employment inflation goals are now more balanced, and the latest 3 inflation readings add, quote, somewhat to confidence.
I'm declaring shenanigans.
Yes, I don't want to get into the details here. I just wanted to touch on this one lightly.
I'll tell you why that's BS, though. Okay, so when they say they want to get inflation back down to 2%, it's not just the overall, one section of inflation, right? It's not just energy. It's not just food. It's not just shelter. It's not just services. It's not just, wage growth. It's all of it. All of it needs to be 2%. A little bit of backtracking here, backstory, why they need it to be 2%, because that is what they consider stable, right? It's you can predict what the future is, what's coming in the future, okay? So they want to get it down to 2%. Here's a problem with that. It's never going to hit 2%, at least anytime soon, okay? These rates would have to stay here higher for a very, very, very long time. Shelter in and of itself is at 5.2%, right? When we started this thing over a year ago with the higher rates, it was well above like 8, 9%. We're just now getting to 5.2% year over year.
Yep.
In order for that to come down, home prices would have to come crashing down in order for it to get down to 2%. Right?
Yes.
And that's not happening anytime soon unless there's major layoffs and there's a flood of inventory online.
So we're already seeing a flood of inventory in the South, Texas and Florida in particular. You're already seeing the highest level of new home supply in history, even leading up to the great financial crisis. You're seeing bigger numbers than that.
Yeah.
So there are red flags that are ringing all over the place. We covered that in the last episode, which was appropriately titled Recession Red Flags. And this is the moment where I'm going to read a little bit. And as I read, for those of you watching the YouTube channel, you're going to see Said's face perk up, get very happy. He's going to have this aura of just confidence. And that's going to be the real Saied coming out. That's the man.
See what you're doing?
That's not the character. That's the man.
I don't like what you're doing here.
Tell me this doesn't make you happy.
Stealing my thunder.
Okay. According to Yahoo Finance, markets are betting that there is a 100% chance the Fed cuts rates in September. For those of you who recall previous conversations, we often cite Bloomberg's World Interest Rate Probability as one indicator and the Chicago Mercantile Exchange. That the last time we checked was north of 70%. We're going to talk about that again briefly here. But that has changed dramatically.
It was at 70%. It went up to 80%. Now it's jumped to 100%.
Which has not happened this far out from a Fed meeting yet.
Yeah.
There's never been 100% probability this far out from a Fed meeting.
Right.
That is very unique.
Of a rate cut.
Of a rate cut.
All right.
Yes.
But of a rate increase, it has. Not of a cut, though.
Yeah. Well, increases in my mind are much easier to predict.
Yeah.
Investors are confident the Federal Reserve will be lowering interest rates by the end of its September meeting. As of Tuesday morning, which is today, again, the 16th of July, markets were pricing in a 100% probability of an interest rate cut in September per the Chicago Mercantile Exchange Fed Watch tool, up from a 70% chance just a month ago. In 4 weeks, it went up here, and we're about, 6 weeks out from this meeting?
Yep.
The increased confidence comes after a better-than-expected June inflation reading, combined with signs of further cooling in the labor market. In sum, economists and investors alike have taken the data to mean that the Fed will begin cutting interest rates soon as inflation falls closer to the Fed's 2% target. Closer, but not to the Fed's 2% target.
Right. Exactly.
So, Saied, allow me to be the first to say, I give you your flower.
Oh, thank you. My flowers. Give me all the flowers. Come on, man. You gotta get hip, bro. I mean, you're the one that's talking about the Riz.
There's a lot of people using the Kevin gave LeBron his flowers and all that kind of stuff. I'm not into that rhetoric.
Why?
I don't.
You gotta give them their flowers. I think it stems from you gotta give them their flowers instead of giving them flowers on.